I'm Matt Klukas, President and CEO of Criterium Energy, and today I'm going to walk through our AGM presentation, which was provided on June 16th, 2026. I will be making some forward-looking statements, and this disclaimer and this presentation in its entirety is available on our website. This last year in our AGM, we highlighted a year of progress, a year of challenges, but also a year in which sees us set to more than double production on a BOE basis in the very near term. By diversifying to gas from Southeast MGH, we will generate a very predictable and stable cash flow stream on account of the fixed take-or-pay gas sales agreement. This will help us provide very clear direction on strengthening the balance sheet. So delivering against our priorities last year, we see the Tunkal gas development take center stage. This is the production sharing contract that we own 100% in and operate. And there we successfully tested the Southeast MGH field up to 8 million cubic feet a day, and the North MGH field about 2.5 million cubic. This both underpinned plans of development for these fields and set the stage for key terms to be agreed on both the gas sales agreement and the facility sharing agreement. We're using existing infrastructure for gas processing, but a pipeline was required. And to do this, we vendor financed, and that construction is commenced and is ongoing. And I have a video that I will share shortly, which will highlight some of the progress being made. We've done this all by investing less than $2 million into this project, and that capital is now behind us. We see no significant capital outflow prior to first gas from Southeast MGH. All of this activity resulted in a significant reserve and resource increase. We saw a 70% increase in 2P reserve, and this diversification to gas was very apparent there, with over 55% of that now in natural gas. Again, this will be tied to those long-term take-or-pay contracts. We didn't forget about the oil, and we've got mid to long-term potential in waterflood and Lamont. The Lamont is a testing of a lower quality reservoir than the main Taft reservoir. And using proven technologies with both waterflood and Lamont, we can unlock sizable regions. We did all this while maintaining a cash balance, collaboration with our existing lenders to ensure that we had the capital available for the gas development. And with the allocation and kind of strategic shift to gas, we did see a decline in oil production. But we are looking to remedy that quickly with the upgrade to our service rig, and also driven by an increase in free cash flow amidst the higher oil prices. We're able to reinvest in some near-term oil optimization, which is ongoing. And finally, when we look at what's hindering our balance sheet, we see both debt and legacy historical taxes. We've engaged with the Indonesian tax authorities to see how we can manage those tax liabilities. We did see a proof of concept or an initial win there with initial VAT reimbursement of about $1 million towards the end of 2025. We still have 3.2 million outstanding. Are working to clean that up. Focusing in on the Tunkal PSC again, this is where we have most of our resources and our attention and our capital is going to the Tunkal PSC. I just want to highlight our oil field, the MGH, PLT fields, and really the main focus of last year, the Southeast MGH. The pipeline here, which connects this to the TRGP gas plant, is under construction at the moment. After Southeast MGH is online, we will turn our attention to North MGH, and we intend to do a drilling program at Machangadang and Chera at some point in 2027 to fully unlock and understand both those resources and bring those closer to production. What we are looking and aiming to do is move quickly with all these fields from resource to cash flow as quickly and with the least amount of capital. This is highlighted by Southeast MGH, which we brought online for under $2,000 per flowing BOE and less than 50 cents per 2P. So how's Southeast MGH going in progress? Of course, following the successful test, we've now in the process of building a pipeline to tie it into existing infrastructure. So I want to share a video here. This will start in roughly last year in July with the well test, and then move towards current day pipeline production. You can see here, at this point, this was back in July. We're preparing the well site for the well test, which was ongoing. Here you can see the test results. As a note, this is about 5 million cubic feet a day is what you're seeing in the flare there. We did bring it up to 8 million cubic feet a day, but any higher, the flare would have gotten too big and would have essentially burnt some trees, and we avoided that. This project is a vital object in Indonesia that helps us push this project along through many of the processes. Here we see a new wellhead that's been customized just for this gas field. Finally, the pipeline construction, the last bit needed to bring this to first gas. What you can see here is we've cleared the right of way and pipeline welding is ongoing, as well as it prepares for burning. What I wanted to highlight here in this part of the video is just showing the rights of ways and the environment in which we are building. Most of the pipeline route is on existing rights of way. What you're seeing here is land that we have recently cleared that will be laid, and the pipeline will be laid. Looking here, this is coming away from the Southeast MGH well site. You can see the pipeline is laid just along the right of way. This is before it was buried, obviously, and we'll continue to provide updates on this as we have them. This last shot here is a good example of the terrain and the environment that these are palm plantations, relatively simple construction. The pipeline construction is ongoing at this moment with multiple staging areas and multiple. When we look at the broader gas development of Tonkal PSC, here we see the Southeast MGH field highlighted here. This pipeline is being built at the moment, which will tie us into the TGP and off to the sale. The next phase will be building up to North MGH, tying in the 2.5 million cubic feet a day there, and also any incremental and associated gas potentially within the oil field. I mentioned Chera and Machangadang will come next. That we'll see drilling programs executed in 2027, which will allow us to then move towards tying these in. So what to expect looking ahead? Gas production, we seek to target production between 5 and 8 million cubic feet a day from Southeast MGH to set that baseline cash flow company. North MGH development, bring that online as well. And this allows for any MGH stranded gas to also be commercial. Oil production, mentioned the near-term optimization that's ongoing right now. We'll also do some maintenance at our central processing facility in the MGH field, as well as conduct low-cost pilot programs, both the Lamat and the waterfront. Further gas development at Machangadang and Chera, moving that through a plan of development stage, as well as start preparations and to drill Machangadang and Chera at some point. On the portfolio side of things, Lulu still plays a very active role, very important role in our previously disclosed. We're seeking alignment with the JV partners in a revision to that plan. In West Salawati, we're seeking a partner and the potential re-entry of the production well there. Well, and further development. Before I leave you, I'd like to just touch on a map which shows Criterium and where and how we're strategically located within Indonesia. We talk a lot about Indonesia and the high energy demand growth, population growth, the GDP growth, but this is a very unique region. In that you've got most of the demand is centered in two islands, predominantly Sumatra and Java. Java, most notably, has 160 million people living on it, and 65% of Indonesia's energy demand is on that island. If you look at Jakarta, that's 40 million people, almost the size of Canada in one city. And where's Criterium located on this? In this map, which highlights demand intensity, so you can think of it as energy demand. Blue is low, red is high. Red, we see high populations, industrial areas, energy consumption. When we look at Tonkal, specifically on the gas, we're very near to the TGI transmission line, which ties directly into Java and many of South Sumatra's high demand markets. Hence, we start from demand and work our way backwards. Criterium is one of the first one of the first projects that can be brought online and into the market. But SoCal is very well located gas production, connecting that to the Hulu is in the exact same position. Hulu, located offshore Java, is near an underutilized gas pipeline, which ties directly into one of the highest demand areas. And so we'll look to continue to drive this forward, and we'll look to continually to position ourselves so we can bring on incremental barrels and incremental gas production at minimal cost to both the benefit of Indonesia and to our shareholders. Why does Criterium win in Indonesia? Why do we win in Southeast Asia? We have a portfolio that we're able to reinvest in and see very rapid capital payback. Southeast MGH is a really good example of this. We see payback and anticipate that in less than 6 months. We see strong support for oil and gas development from the government. We see premium oil pricing, monthly lifting that historically received a premium to Brent and ICP, and stable gas pricing. This we anticipate between $6 and $7 per MMBtu on a fixed take-or-pay contract. Revenues are received in USD, with the majority of our costs in Indonesia. As I mentioned, utilizing existing infrastructure with spare capacity allows us to execute this infrastructure-led strategy, allowing us to bring on incremental production at low cost. I look forward to providing more updates as construction is ongoing at Southeast MGH and ultimately upon first gas. Thank you.